Welcome to CryptoMovers. In this video, I'll be going over the VWAP indicator. The VWAP indicator can be found on the trading view under the indicators, built in, and down here at VWAP. It'll show up as this blue line, and the VWAP is an important indicator in determining the short-term average price where most of the money was exchanged at. VWAP stands for volume weighted average price. So it indicates the average price an asset is trading at based on volume or the amount of money that was exchanged. What VWAP can tell you is if you're getting a good price in the short term. If you're buying below the VWAP line, then you're buying below the average price the market bought at. VWAP can only be used to show the average price of the volume intraday. So if I go to the 1 day, the VWAP disappears. Now, if I go back to the 4 hours or anything less, you'll see the line. VWAP is used to time an entry or an exit. So it's not to determine whether or not you should enter the trade. Buyers, as always, buyers want to enter below the VWAP line because if you're entering below, you're paying less than what the market paid for during the short-term time period. And if you're a seller, you want to sell above because you're selling at a premium to what most of the market was buying for. And in that way, VWAP kind of also sort of acts like a magnet. So if the price gets too far ahead of the VWAP, you'll see the price tend to just go back because that's where people are doing most of the exchanges. So every time you see like a jump, like right here, you'll see this jump on Bitcoin, USD, right here, you see this jump. It comes back right down and it touches the VWAP because that's where it was going. That's where the price is at still. This has no volume really. This is just like a few trades or something compared to where this was or this price was. So it has to go back to the VWAP line and it picks up again and it starts riding the VWAP line. It gets too far ahead, comes back down. And the same thing happens when you're on a downtrend too. So it goes here, goes too far ahead, goes back to the VWAP, goes too far ahead, goes back to the VWAP. And so the VWAP, it doesn't let you know where the price is going. It's just letting you know the average price where people are buying and selling. And this is very important for especially banks and hedge funds, where big institutions where they have to move, like say $10 million into something. If they're going to move $10 million into something, then they're going to drive the price up if they buy all at once. So they slowly move their price in and they try to aim to get their prices below the VWAP line because that ensures that they're buying cheap, at least for that day or during that short period of time. Now, you can't use VWAP alone when you're trading. The VWAP can't predict the price, it can't determine trends, or can't determine direction. It is strictly used as a measure of what price most money was exchanged in during the intraday period. So don't use VWAP to determine or decide whether or not to enter or exit a trade. You only use VWAP when you've already decided you want to enter and exit and you just want to fine-tune your timing and price. So I hope this video has helped you understand how to use the VWAP indicator. If you have any questions, feel free to leave a comment below. If my video has helped you and you would like to donate, I have included my addresses below, and feel free to like and subscribe. As per SEC rules, I am not a financial or investment advisor. What you do with your own money is at your own risk.